It's Frank Cappelleri from Capp Thesis, and I am thrilled to be joining Stockcharts TV today to talk about how I've used the system for nearly 20 years now, the features that I find most helpful, and then we're going to go over the market and talk about 4 specific topics. So first of all, again, I've been using Stockcharts for nearly 2 decades now, and a lot of that time was spent on Wall Street. So basically for my entire career, I've been creating content for clients, initially just for institutional clients, now for financial advisors and active private investors as well. So what is the first thing that you need to make sure of when you're producing any sort of research report or piece of content or note for that matter? Well, the charts have to be clear, because think about it. How often do you read every word of anything that you see, whether it's a Substack piece, whether it's a book for that matter? The first thing I know that I look for is a chart or a picture that kind of tells the story the best way possible. And from all of the platforms that I've used, and I had access to many, again, through nearly over 25 years on Wall Street, is that Stockcharts provides the cleanest looking charts of all. I've gotten compliments many times about just how clear the charts are, and I have the luxury of using the platform to have the cleanest looking presentation possible. If you're users of the system, you know exactly what I'm talking about. And if you're not, I urge you to subscribe, because you will see exactly what I'm talking about. The second part, and just as important, is that Stockcharts gives you the ability to put dozens of charts on one particular security, even hundreds if you wanted them. And again, I can guarantee you they're best in breed for this as well, again, because I use it every day for this specific reason. Here's an example of what I mean. This is just looking at the charts that I've had so far in 2025, so not even 5 full months through the year. As you can tell, I have quite a few charts for the S&P 500 alone. No, I don't use all of these every single day. However, they're very important to my process and understanding the fact that I can choose any one of these, or a handful usually, any day, to convey the message or the theme of the day. And a lot of times that is, building the story up with multiple perspectives, multiple indicators, moving averages, price patterns, all of which we'll talk about today. And the third thing is that Stockcharts gives you the ability to look at all the charts that you want in the way you want to view them as well. Just going to this View As button here, and you can see that there's more than a handful to choose from. And today we're going to be looking at the market through the chart book view. So as we can tell, we're looking at this particular list for Stockcharts TV for today, Wednesday, May 20th. This is the chart book view of it. And these are all the charts that we're going to be talking about today. So as mentioned, we're going to be talking about 4 different topics: the S&P 500, Bitcoin, XLK Technology, and then a handful of recent trade ideas as well. And so anyone who's followed my work understands that I'm always trying to identify what type of trend we're in. Sometimes that's pretty obvious, like last year, but if we're in an uptrend, we always have to think about the factors that have created this. And so we have 5 very important traits that we believe are integral to establishing an uptrend. The most important of those by far is seeing successful bullish patterns play out. Now, that may sound pretty simplistic, but think about what happens in an uptrend. You need successful bullish patterns. You need breakouts to work, the upside targets to get acquired over and over again. And as we can see from this chart here, from the low in October 2023 all the way to the end of 2024, we had 10 straight successful bullish patterns. Again, meaning that we got a clean breakout, the upside target was hit, and then the process started over and over again. And when that occurs, it just means that consolidation zones keep on getting resolved to the upside. Now, as that was going on, we knew that wasn't going to continue forever. And so we're always looking for clues of when something can change. And so along the way, in December was the first time we had a failed pattern. That happened over and over again through February. This was one of the failed bullish patterns that we saw, and actually the biggest one as well in February. As we know, come back, the S&P was testing its highs numerous times, finally got the breakout, and that produced an upside target of 64.25 on the measure move basis. That was negated. Again, this was the 3rd straight failed bullish pattern at the time after 10 in a row working. So it gave us an indication the market character had changed. And of course, we're out of that trade, so to speak, at that point. And then we know what happened from then. The market has completely rolled over. So this did not call that type of waterfall decline, but it did give us a sense of being cautious where before there was no real reason to be, again, through the end of 2024. So we've been looking for successful bullish patterns ever since. And as we can imagine, from the middle of February through April or beginning of April, they're hard to identify. Maybe some on a very short-term basis, but they were quickly negated along the way. That lasted until just a few weeks ago. Again, this was the beginning of April. This was April 7th, the huge downturn and pivot day. And then April 9th, the huge upswing, which produced a potential higher low. This breakout got negated the very next day. So we had the regroup, but we kept on looking for these because we knew eventually if this market was going to turn, we can identify some bullish formations in the short term work first. And so we're looking at the 60-minute chart here. So eventually that did happen, which produced an initial target of 58.40. And of course, that was then hit just say about a week or two ago, right? And that's very important. First successful bullish pattern of the year. We had to wait 5 months for that to occur just about because that sets the foundation for more bullish patterns to form. And of course, to build the foundation for a longer uptrend to occur. So from that point, another bullish pattern got triggered. 61.25 again, it got tested immediately in the first few days, but as we've seen over the last few weeks now, the market has done a very good job of not only coming back, but closing very well on an intraday basis. So that's really was missing as well on the way back down. So now we have 61.25 as a target. The next target, or the next bullish pattern, was then formed and then broken out of, which brings a much larger target of 65.55. Right? But again, we've already built up a relatively good cushion after extending now. Again, we have a 9-day winning streak and then a 6-day winning streak. We'll see how long that continues. But when we have these large patterns targets, I get asked a lot, how confident am I that these will actually get acquired? But it's really not about confidence. It's about seeing how the market follows through. And there was a big target that we had in place last year after the S&P 500 broke through 4,800 back in January. That produced an upside target of 6,100. That remained in play all year and eventually got acquired in December. And one of the reasons, again, we just saw in the first chart, was that smaller bullish patterns along the way were leveraged successfully to confirm the uptrend that was in place. It also pulled the S&P further away from that breakout zone. So that cushion was even bigger to eventually pull back to and from and keep that target in place. And that's what we'll be looking for right now. This could easily get negated in a week or two, whatever happens. We know that the news stream isn't slowing down that much at all, but as long as it remains in place, we'll have this upside target in place. We'll have 61.25 and probably others along the way as well. As that's going on, we're always on the lookout for potential change of character once more, right? And so this currently, if we connect some of the highs and lows here, could be classified as a bearish rising wedge pattern. Now, I kind of have issue with calling something, the S&P 500, that's up about 23% in a very short amount of time, any sort of bearish pattern, because I don't believe that is the case. That being said, we can understand that if this uptrend, this very steep uptrend line gets broken, then things are changing. It doesn't mean that the market has to completely roll over, maybe eventually, but it will also mean that it will just have to establish another bullish pattern or another higher low of which to leverage, which so far it's done a good job in. And here's another picture of it in on the daily chart. Again, up 23%. We know this really steep uptrend line, this really strong persistence will not last the way it is, but it then can turn into the next phase of the uptrend if all things go according to plan at least. And so another way to look at this is potentially we roll over, break that uptrend line. This can then maybe turn into some sort of topping pattern that's not just straight down as well. So I would say that at this stage, we know there's going to be a pullback. From a bullish standpoint, you want to see a higher low etched. If not, then of course a lower high could develop in the next bearish pattern. And that's another part of this process too, because what don't you see in uptrends? Bearish patterns working, right? Which of course we saw that on the way down, and then things have completely shifted from that point. And so turning to the XLK Technology ETF, as you know, the comeback has been really predicated on large cap growth to the point where we had a 6-week move looking at the closing levels on a weekly basis of nearly 30%, just a massive, huge gain, right? As we know. And that last occurred, something like that, a 6-week gain of at least 20% back from March to April 2020. And I think it was a very good perspective to see this because, as we know, not only did we come back through the previous COVID highs, but blasted through that and measured from the low of March 2020 to the high right at the beginning stages of 2022, that was 160% or so advance. This is not a call for that to occur, but think about all of the people that have doubted this move and think we're still going to break the lows and go much lower. That would be an extreme move. So would blasting through the highs to get much higher, both extreme. So we can't discount any side of it. And that's why it's very good to have some perspective. Now, going before that, the last time it occurred was, not surprisingly, 2009, coming after a 64% decline from high to low, huge rally, again, producing a 6-week move of at least 6%. Things calmed down from that point, but still, no matter where you measure it from the high in early 2010, 85%, or all the way into the high from late 2014, and again, over 200% gain. We just can see that big downturns like this that occur over months that really kill the biggest names sometimes have the ability to snap back just as strong or even stronger and last even longer into the ensuing months and even years sometimes. Okay, so again, this is not a call for this, but we've seen things like this happen before, and they only occur after previously strong two-way volatility like we just saw just now. So next is Bitcoin. But before we get into that, if you're enjoying this content, I'm excited to introduce Cap Notes, our free Substack newsletter, where we provide timely market commentary, trade ideas, and access to select premium content. Sign up today and receive our 6-step trading process that powers winning chart trades and limits losses. This is a simple, proven framework for spotting high probability setups. Simply go to capnotes.substack.com, hit subscribe, and we'll send that guide directly to your inbox. So with Bitcoin, whether you trade this or have interest in it or not, it's very important to keep tabs on, because as we can tell here, number one, Bitcoin topped a few weeks before the S&P 500 did in 2025, and then found a low a day before the S&P did in March, and now obviously both are rising together with with Bitcoin getting closer to its highs first before the S&P 500 did. So I think it's going to be very important to track to see if and when the next turning point comes as well. And so it's pausing, as we know, near its previous highs. It also hit one of our upside targets already, 103,000. So no surprises that we're seeing at least some consolidation. And, versus the S&P 500 is very important as well, because as we know, they tend to move together, as we saw from the first chart. And when the market in general and risky assets are moving higher, what tends to outperform? Bitcoin outperforms basically everything. And as we can tell here, during these strongest moves, this is the Bitcoin versus S&P 500. It continues to rally. As we can tell, that relative chart is very similar to this absolute chart, same time frame, log chart, and we see that when Bitcoin outperforms, not only breaks out from patterns like this, produces extremely overbought readings. In fact, buying when this weekly RSI gets too overbought has produced the best rallies, right? So we're still waiting for that to occur this time. And so this is a long-term, again, weekly chart. We can see that the pause is coming, again, right near the previous highs. And if we look closely enough, we can see that it looks very similar to the long bullish inverse head and shoulders pattern that took place for most of 2024 before it broke out. So seeing this pause underneath this zone and potentially form a bigger right shoulder would just strengthen this pattern even more. So I don't think there's any rush for this to occur anytime soon. And then again, this is a long-term view. of the S&P 500 versus Bitcoin. Same type of thing. We're waiting for a big breakout on a relative basis as well. So we know that if the absolute breakout is going to occur, it's more likely going to happen versus the S&P 500 because once more, we tend to see Bitcoin and the S&P move together, with Bitcoin just accelerating the move of any other risky asset class that we track. Lastly, I wanted to touch on some trade ideas. Again, you can see the reason why I like using Stockcharts as the go-to platform to display what I'm thinking and the patterns that I'm seeing in here. So this was Google, and it's obviously news related today. So this breakout may not play out immediately, but what I wanted to display here was the fact that, as we know, this comeback has been led by large cap growth, and Google or Alphabet has been lagging from that perspective. Off the lows, of course, but still very far away from its former highs. It was making new highs at the time, of course. And so, but along the way, it's been forming what appears to be a bullish cup and handle pattern. And so what we try to identify here is if we do get the breakout, the measured move will be up near 192. As we can tell, it's still right below the 200-day moving average. The other moving averages are starting to curl higher, and it always suggests a stop loss as well. And this one tends to, in this stop loss in particular, lines up with where both the 50-day and the 20-day moving averages both are. So it's a good risk level, especially if you're looking at this as just a trade, because you don't want to be caught in case things completely roll over. At the same time, we want to give ourselves some room to ride that breakout if it does happen. Now, this caught my eye because it's a very similar setup to what Tesla looked like just a few weeks ago when we recommended it right before the breakout occurred, noting that there would be a target near 368, not quite there yet, but obviously Tesla continues to do well. And again, just like Alphabet or Google, the pattern was taking place right under a flat 200-day moving average. And one of the things that caught our eye as well was, as we know, Tesla's sell-off was very aggressive to the point where it was making new lows for weeks before the S&P 500 did, to the point where the really big market sell-off from late March to early April took Tesla down to a new low, but just barely, right? Basically respected that support zone where everything else is falling apart. So it looked like at that point that maybe it was completely washed out. And so on the comeback from here, even though it failed a few times at a 200-day moving average, it just looked like it was just ready to go. As we know, it's a very polarizing stock for obvious reasons, but at the same time, we sometimes have to put blinders on, especially if we're looking at chart patterns and realize, well, the worst may be behind us, at least for the time being, and it seems worthwhile to at least try for that breakout. Other than that, we're looking at a few other areas, again, that haven't broken out yet. It's very easy to identify the leaders because we see them all the time. They're profiled on TV, but there are some areas that are underneath the radar right now that are, again, trying to form bullish patterns, trying to come back after getting really hurt over the last few weeks to months. And another one of those is Deckers, as we can tell, pretty self-explanatory, trying to complete an inverse head and shoulders pattern, upside target up on a measured move basis would be 165 there. Another one is Constellation brands, obviously in a consumer staples area, which a lot of those have been starting to come back as well. Very similar, just trying here, not quite there yet. Both of them, if they were to work out, would have targets slightly above their 200-day moving averages as well. And lastly, an industrial company conglomerate, MDU, very similar. This was coming back from a near 30% decline from late November to early April. And again, we have an upside target of near 20 right there. So that's how I use Stockcharts. That's how I, as you can tell, come up with a number of different perspectives on different asset classes and how I use the system to display trade ideas to our clients. Thanks so much, and I'll see you again soon.